Down and talk to someone from private equity. The company is called Saratoga Capital. Basically, it's an Indonesian private equity firm set up exactly 10 years ago during the heat of the crisis in Southeast Asia. And of course, they were able to take advantage of the very cheap deals during that time. I sat down with the CEO, Sandiaga, as you know, and asked him about the difference between the financial crisis now and then and how Indonesia will actually come out of it.
We have banks in a very solid ground. I know NPL will start rising, but it won't be to the 60% level that we experienced 10 years ago. And then we see also people are getting more prudent in terms of doing business and where they access credit market. I see the commodities is sort of like, taking a beating now. But Indonesian economy, other than the export driven, is also rely much on the domestic market. Only less than 30% of our GDP is in the export business. So we see, I think the domestic market would be the savior in terms of the situations, and the government as well as business community now looking at ways how to empower this local domestic economy.
Saratoga Capital's in private equity. You know, as the cliche goes, wherever there's a crisis, there's an opportunity. Are you seeing any right now similar to the ones that emerged from the ashes of the Asian financial crisis?
Not yet. But I think it will. We can start seeing the impact maybe another 2 quarters, because I think the real impact to this world credit crisis or global crisis have not been felt by businesses here. But I think businesses that would be able to manage their costs would be a winner. Businesses that got caught in this whole turmoil with credits and liquidity squeeze would be start to become attractive, and valuations become available. Looking at second half of 2009 and probably first half of 2010 would be the bracket where these assets becomes available, and capital would start to look, smart money would start to look for this type of opportunities.
The banks are reluctant to lend. The cost of credit is going up. How challenging has it been for private equity firms such as yourselves?
Well, we basically, in our model, would deploy credit whenever it's available. And of course, during the dizzying time about 2 years ago, credit becomes so available, it drives up the valuations of business that we're looking in. So we're now seeing banks is getting, I think, not as aggressive, and to certain extents getting really defensive. And we're now refocusing on how transactions can be done purely with no bank financing.
In the good old days, the banks were throwing money at private equity when asset prices were so expensive or so high. Right now, we're seeing valuations drop so much, but it's just not easy to get that capital. Where are the sectors, the types of companies that you're looking at this point in time, and are you looking beyond the shores of Indonesia in terms of investments?
Well, we have a mandate to invest in Southeast Asia, but our core focus would be Indonesia. Things are looking very attractive at the moment, but we want to see whether the valuations would be even more compelling 6 months into 2009. I think the sectors that have been winners in the past would continue to produce better returns, natural resources and mining, energy mining. I think oil and gas looks extremely compelling at this rate. We have been investing in coal. The demand is still out there. Prices has come down a little bit, but the demand is still out there. The need for energy for Asia and the world will continue to be there. I think the demand destructions will not be as severe as what people have predicted.
Now, as you can imagine, private equity firms are finding it increasingly difficult to raise more money, and companies such as Saratoga Capital in the past have relied on the big U.S. investment banks such as Citigroup, Goldman Sachs, a lot of these, as well as GIC in Singapore, to raise some of their funds. Fortunately, they've just concluded a fundraising, Chloe. They said they managed to raise all the money, but it continues to be difficult out there in the markets. And also, there's a big trust issue. And we've heard of the Madoff case, the Stanford case, and investors are just terrified. They're licking their wounds from the losses. And also, of course, they're terrified to invest money with people until they at least see this track record. But at least for them, they did manage to raise some money in the recent roadshow. It's back to you.